Yeah, hi guys. Today we're going to do a SPY transaction. We're actually going to sell an iron condor, and an iron condor is just a sale of a call and a purchase of a higher call, and the sale of a put and the purchase of a lower put for the protection on that. And like I said, the SPY is nice. I like to do iron condors on SPYs because of the fact that you can do a little more technical analysis, and you can kind of determine trends a little, and I can go fairly far out of the money. Not as good as the RUT or something like that, but those are highly volatile indexes. So I like the SPY. It's a little bit more controlled. I just feel really comfortable. I had really good luck with doing selling iron condors on the SPY. So let's take a look. I like to do a little bit more analysis, technical analysis on the SPY than I do on some of the other indexes where I'm selling calendars. Only because if we are in a bull market, or we think a bull market is coming, then I want to stay a little bit ahead of it. I don't want to stay in the middle of it. But I think right now we're kind of heading into this range. Now as I think I showed you on another CD, that we've got this channel going on where we've been in a channel now for several months, and it's been following this downtrend channel. And we've had a bit of a bull market here. We've run up a little bit. We've gone above this upper trend channel line, and now we're coming back down to it. I've created this little blue channel just in case we do actually start moving up from here. It's coming down to the bottom. Prices right now is around 132.51. It's coming down to this blue line down here. If that holds a support, this blue uptrend trend channel line might actually be the next trend in the SPY. So we'll just keep an eye on that. Right now, it looks like resistance up here is pretty strong at around 139. And remember that support, okay, it was support right around here. Now becomes resistance, and it's been resistance here. It was resistance here, and it looks like it was resistance here again. So, if the indexes can break through that, that's we could see much more on the upside. But the SPY right now seems to be holding into there. There are some very, very long-term channel lines here. Don't let all these lines confuse you. I'm just really taking it long-term channel lines. Let me go back a little bit. I'll go back here 20 years and show you what I mean. I've got these uptrend channel lines going back to later 2002. Now this is a monthly chart. But from 2002 you can see all the way up to the present 2008, we've been in an uptrend. Now we hit the upper trend channel of this very long-term 5-year trend channel line here back in October of 2007, and we've drifted all the way down to the lower end of the channel line, which is, what is that, March of 2008. We dipped below that channel line and then closed above it, and now we're kind of like in the middle of the lower 25 percentile here. It just kind of gives you an idea on a long-term basis what the market is doing. I mean, does that mean that was actually the bottom of the market? We don't know. If it breaks through this downtrend channel line here, which was set back in 2003, we could be in for a nasty little bear market. But, like it was back in 2000 to 2003, that was a nasty little bear market there. The S&P, the SPY went from, looks like about 140 down to 70. It cut it in half. So we're going to keep an eye on that. But, these are monthly charts. So within a month, the SPY can move. The SPY moved between 137 and about 132. We're right down actually at the lower end of our monthly chart here, which is about a 5-point range. Most of the months you can take a look at here. Let's see, this one went from 152 on the high, 153 on the high, to 142. So it's about a 9-point range there. This one was 151.45, and I'm looking up here at these high and low figures when I hover my mouse over the price chart. This month was for June of 2007 and went from 151 to 145. That's about a 6 point difference, high to low. This month was May of 2007 and went from 150 to 144. It's about 6 points. Let's pick out a really big month. Here's a really big month right here. That was January of 2008, and it went from 146 down to 125. That was a huge move. That was about 20 points on the SPY. But the normal move is anywhere from 5 to 7 points. If you go back in time, this month, this was November of 2005. It went. The high was 123. The low was 116. So it's about 7 points. So between 7 and 9 points is a normal range for the spiders over time. Now, if we come in a little bit closer here, we can see we've been in this downtrend channel here since October of last year. We just kind of drifted down. We broke this uptrend channel line here, and now we're kind of going back down. Now, whether or not this trend channel line becomes it was prior resistance, whether it becomes support or not, we're kind of right on the edge of it. So we'll find out pretty soon. But in any case, if we do in fact have a 7 to 9 point range of movement in the SPY over the next month, then we want to plan accordingly. So we really want 5 points on either side. If we're going to do an iron condor, we want 5 points at either side of the current price, which is 132. So if we can get anything up above 137 and anything below 127, I think we'll be in good shape. Of course, adjustments, depends on the market conditions. Adjustments can and will be necessary. You can see here, this 30-day period here, it went from market. This is the January move. We're about 25 points or shaving off of the SPY here. So that was a pretty heavy move there. If you were in that move, you would have definitely had to do some adjustments once it approached your break-evens. But let's go to the trade window and take a look. And I've already pulled up the 139, 141s, and we wanted to stay 5 or 10 points, 5 points above and 5 points below, selling an iron condor. Let me just delete this for a second and show you how this is done. When I select, I type in SPY up here, and I get the SPY strikes, and as always I try to widen them as much as possible. So up here, if you've only got 4 strikes out, you're not going to see as many strikes as you want in your window, so you want to try to widen that out as much as you can, especially if you're selling iron condors. And we want to come down. I like to sell at least $1 on the put and the call side. So I'm going to start out at 139. If we take a look here, 139 is just above this resistance point, so that's good. That's good. We'll go with that. And we want to sell an iron condor, and that'll bring up our order entry here. And we've already got it set at 139 on the call side. I like to do 2 points apart. I like to go 139, 141. If I was doing the 140, I'd go the 142s. And then on the downside, we want to try to go 5 points below, which is right around 127. Let's see what we can get for the 127 strike. We can get decent prices, but you know what? We can even go lower than that. We can go down to the 124s if necessary. If we sell the 124s, we can still get $1 for them. And we'll go 2 points below, 2 strikes below that at 122. And now we're looking at anywhere from 72, 73 cents. It's not bad. That's not bad, and that's a pretty wide range. So let's whoops, I want to do 5 of these. Let's just analyze this for a second. Our maximum profit is going to be $360 on 5 contracts. Our maximum loss is $640. And since obviously the index, the SPY index, can only be at one point, can either be higher or lower than our break-evens, we don't get, since our maximum loss is $640, we don't get margined on both sides of the trade if we enter this order as a selling an iron condor. We only get margin on one side because they know that if the market goes this way, well, we're making money on the on our put side. If the market's going down, we make money on the call side. So we only get margined on one side of the trade, which is great. That's why I like TOS so much. Okay. So we're just going to kind of spread this out, and I think we're good to go. I like this trade very much. We're right in the center. If necessary, we can, we can adjust. Our Vega is slightly negative. Okay, what happens when you're slightly negative Vega? If you're short Vega, if Vega drops, you're going to profit just a little bit more. If you're long Vega and Vega goes up, then you're going to profit. But I think we're probably going to remain fairly neutral. And let's just take a quick look at the VIX. Okay, as you can see, I've also done a long-term chart. Let's just go back here a couple of years, and you can see that there was a little reverse head and shoulders down here on the VIX going back to December of 2007, and this little blue uptrend line, it looks like the VIX has been following this pretty well. As you know, when the VIX increases in price, stock prices generally decline. A higher VIX indicates more fear in the market, and that includes prices going down. We've had a number of rallies during this uptrend in the VIX. But right now we are currently, let's just zoom in on this. Our uptrend line was violated here. It closed below here. It closed below here. It closed below here, and then it went back up again. And now it's hanging right around here. It may go up to this 25 level, which looks like it was a prior resistance area for the VIX before it broke through. So it may come back up here. We're kind of like in this no man's land here, and it might actually, I'm kind of looking for the VIX to come back down into this area between 22 and 21. So we really want to be short Vega here. We'd like to be a little short Vega, which our position is actually, let me go back to the Analyze tab here. We are a little bit short Vega here. So if Vega does decline, that'll actually help our position some. So let's go back to the trade window, see where we are. We actually have about 72. If we hit the midpoint on with these, you're not going to hit the midpoint too much, and I'm not going to quibble over a penny or two because the bid and ask prices are pretty tight. They're about 5 cents apart. So if we go ahead and we try to get 73, we'll do that. Let's send that out. See if we get filled on that. As always, we try to wait a few seconds and see if we can get something in. If we can get it in at 73, that would be very nice. If not, we may have to shave a few points off of that. But when I'm trying to determine market direction, where to set my support and resistance points, especially when I'm selling an iron condor, I like to take a look at the VIX. I mean, price is great. You can take a look at price, and I've done the same thing for the Dow Jones Industrials here. Whoops. I like to take it back a few years just to see where we've been. And if I go back 20 years on the Dow Jones, I have to go back farther than that on a really long-term basis. But it helps you give you some perspective. I mean, you can see from 1932 here, we hit this downtrend channel line, which held back in 1982 2, which was really the beginning of our current bull market. You can see from 1982 on, except with the exception between 2000 and 2003, we had a small bear market, but we're still well within this very, very long-term uptrend channel line, and we're still at the 50% level of that uptrend channel line. We haven't even gone below 50% of that uptrend channel line. So, I mean, on a long-term basis, this really helps to give you some perspective on the market. If you're a long-term player, I mean, you take a look at this resistance line right here that was hit 1, 2, 3, 4, 5 times, then finally broke through here. Boy, you should have been long and all over that back in 1982 the market. Let's zoom in on that a little bit. You can see it broke through right here. Resistance became support when it came back down in here, and then it just took off. And it's been going up ever since. So, you know, on the monthly chart, you can see also that this line right here was resistance for quite some time. And it was resistance right here because it got up to that point and came down and then finally broke through. You should have been all over it here at 11.5, and then it traded all the way up to 14,000 before backing off again. Now this resistance line here, all of a sudden, of course, resistance becomes support. So this point right here became support for this January sell-off that came out down here. Let me just get rid of this so you can see this better. This line on this bar, this monthly bar, came down and almost hit this prior resistance level, which now became support. Now, whether or not that holds to carry the market up higher, you know, we don't know. We don't really try to predict price. We only take a look at price to see where in general it is in relationship to where it's been, and that's about all we can really do here. But you can see that, you know, we've been in a pretty good steady uptrending market since, you know, 2005, and right around here, middle of 2006 was a great buying opportunity all the way through the end of 2007. Where we'll go from here is anybody's guess. All we can do is, you know, do the best we can. Well, they're not going to give us 73 cents on this iron condor, so we're going to go ahead and take a look at a cancel replace. We may have to go down to 72. Yeah, a penny is not going to hurt us too much. Let's put that in. And that's going to work. And within a few minutes, if we don't get anything on that, we'll do another cancel replace. We may have to go to 71, but boy, I like to, you know, I mean, there's sometimes when you want to be aggressive, and there's sometimes when you don't want to be aggressive, and you know, right now, the way the market looks, you know, it could go either way here. We're going to go, let's see, let's take a look at our daily again. You know, we've been stuck between, on the Dow, between 12,750 here, down to about 11,750. Let's just draw a little line in here. Right about there. So, you know, we've been stuck into this range, and, you know, if we can break out either way, we're right in the middle of the range right now. Right dab in the middle. This is a high end, this is a low end. And if this blue uptrend channel line continues to hold, we should be in good shape. So, you know, who knows where we're going to go from now. I do also like to take a look at this when I'm kind of fitting positions in. Looks like looks like I got filled on my 72 cents. I didn't have to go too much lower than that, which is good. So we put it in at 12:30, or we put it in at 12:28. Within 2 minutes, we got our position filled. So we're in good shape. Let's go back to our Analyze tab. Let's delete our simulated positions, and we want to show all, and that's where we currently are. We're short, a little short Vega, which is good, a little short Delta. Our theta is a nice $7.74 a day. I think we're in good shape here. We might see some more weakness, but we've got a nice range here. Let's set our slices to our break even. We're at 39.72, right around 140 and 123. If we take a look at our chart for the SPY, we want to be up this 140 level as our break even, because that's just above our resistance, and our low break even was 123, which is really nice. We're way down below these lows down here, so we're in very good shape here. We will keep an eye on the position, and now we're starting to build our portfolio a little bit. We have our IWM position, we've got our SPY position, we're starting to build our portfolio for this month. We have 31 days. We'd like to get all our positions in at least 30 days before the expiration, and we're working on that now. And you don't have to put them all on the same day. And we have been I've been adding a position a day for the last couple of days here, and in this test account, just to show you guys how I actually add positions. And I think work out very well. Now, remember, adjustments may be necessary, and this is where it becomes absolutely critical for you to understand how to trade, because you don't put on these trades and just leave them alone and don't even look at them. You've got to really kind of take a look at them. I mean, you don't have to hover over them, and you don't have to watch the market every single minute of every single day. But what you want to do is you want to take a look at your positions. Let's say we do a portfolio weighted position here. We've got some other positions on. We want to take a look at this, all of our positions on a portfolio weighted basis, and we want to make sure that we are in the sweet spot, which is right in the center of our picture graph here. This is our expiration for May, which is what which is the front month of our trades that we're short. We're collecting theta in this front month of May. I'm not going to count April because we only got a couple days left in it. And we want to stay in the center position. Now, if we get to one side or the other of this this picture, we want to start to make adjustments. We don't want it to wait until we get down into here or over here. We want, as soon as they start approaching our break-even points, we want to make some adjustments so that we remain profitable for the month. And that's where it becomes absolutely critical that you know what to do. And when you watch the CD on adjustments, you'll know exactly what to do. You'll have no hesitation. You'll know, and that's why we, constantly say trade with confidence, because nothing should surprise you. When something happens in the markets, and all you have to do is watch for your break evens. You want to take a look at your break evens on a daily basis. You don't want to go too long and have your prices, beyond your, at the point where they're beyond your break evens and beyond hope. You really have to take a look at this at least a few minutes every day. And that's all. But that's all. You just kind of look at it, leave it alone, and you're going to have a very profitable month. Now, there are things that happen that are totally out of your control. I mean, if we get a day where you have the potential of a once in a lifetime sell-off of 600-700 points on the Dow, even then at 132.50, 600 points on the Dow is going to bring you down to around 12,400. Well, that's right around where your break even is. Okay, so you're not going to get hurt too bad. You get hurt a little bit, but you're not going to get hurt too bad. And plus, there's some adjustments that you can do when it's down there. Plus, if it does fall that much, the VIX is going up. Option prices are going to be a lot higher, and you're going to be able to sell additional premium. So there are things that you can absolutely do. That's it for today. Hey, trade with confidence, guys.